Okay, Saturday, November 12th, 2016. I'm starting off with the chart. Here's New York Stock Exchange, and here's the NASDAQ. But basically what I'm looking for are the little pink dots, once again. McClellan Summation Index. It's basically a running total of issues. So if the pink dots are lower, the heart isn't pumping as strong. How about we'll say that? Yeah. But now let's talk about the circulation. Okay. Going back, here's 2014, 2015, 2016, right? Okay. Where am I at? Pointer. Okay. Summation. Oops. Come on, you. Summation index. Pink dots. Okay. And that looks like a level. And let's do it this way. Okay. All right. Pink dots. Okay. And this red line here is the zero line. Okay, so we need stat on here. So this is where I started this morning. Okay. I took a look. Here are the dots leading up to it. The beginning of the year, pink dots were down here. We traded up, traded higher. Post-Brexit, right? We have end of June here. This is post-Brexit. Okay. You guys are on your own. All right. So we have the post-Brexit here, and this is a New York Stock Exchange, which failed to make a new high. So right off the bat, I'm getting a little defensive. We'll say we're exercising. What do they call that? A plateau. You're exercising. You're expounding the same amount of energy. Okay, but you're not getting the results. You worked. Here you go. You worked just as hard, but you didn't actually gain any more muscle mass. Oh, Lord, if you knew how much I weigh. Kevin, shame on you. All right. You didn't gain as much muscle mass. Actually, you lost. Okay, so I became defensive post-Brexit. You're on your own. My little post. In the background, the New York Stock Exchange is just falling apart, but prices are being held up. Why? It's a narrow focus, right? If you want, okay, all the algos and everything that's better than us, okay. Don't go look at the manager's money returns for this year. But okay, back on track. All right, everything that's out there is out there. Everything's fine-tuned. Apple stock or IBM stock trading in pounds or in euros or in yen or things of that. Everything two-sided, liquid. The market last price, that's what everybody, that was fair, okay? Because everybody kind of hovers and make a bell curve around price. So they're all within a certain range. What's one standard deviation, blah, blah, blah. Okay. Dots come down here overnight now. Following on this one, this is daytime stuff. So when we had our little patsy plunge with the election, all that showed up in the futures department, right? Because these cash indexes and that were closed. I haven't had time yet to look at London because that's where things were going to show up. I was a little bit busy doing some other stuff to just basically go off the reservation here. Let's keep it to one continent here. So the dots are down here. Okay, we also saw the dots were down here before, and the dots were down here before. I guess this was a pretty decent swing up higher. Okay, this one basically they pulled it back up. This is usually when I see a pattern like this. This is deep. So any sort of spring out, it's going to need some injection, and it's not having it. Okay, and this is the peak in 2015, and the swoon into this. The whole thing was after the first interest rate hike, basically put in the bottom, just like Brexit. The interest rate trough was put at just post Brexit. Everybody just scrambled in. All right, so. All right. Well, what you bonkers. Modern technology. Update your operating system. Okay, what's this do? It makes a bell noise. All right. So you have the pink dots down here. this was an ominous sign here too. It flowed in with China. Okay, the little pink dots came out. This was the China. This was the interest rate. Whatever you want to blame it on. I don't care, because there's January and February. Blame it on whatever. Okay. We had the move up. Actually, I had all this. If you how closely you guys follow me, but stop it, Kevin. All right. The pink dots are down here. Okay, so I'm like, well, the market is susceptible to a short covering rally on pretty good sized move here. Okay, now first off, it's not going to be short covering in Apple and stuff. It's going to be all the little guys, because this is accumulation of all of the stocks. I think there's 1,500 in there, whatever. Okay, so you're going to get names that you probably haven't heard of or thought that they'd merged or gone BK. Okay, that would go chasing after this, right? If you had an opportunity, stuff like this happens in these small little boutique firms where they go and bully stuff around, okay? And we'll see it now. My first problem is, okay, with equities and things of that nature like this, if a stock has gone from $240 to $2, how much of the ranch do we bet on? Bet with? That's the problem I have. That's why I have a disdain and dislike for equities. Okay, I don't EBITDA, I don't PE, I'm just looking for the flow. Is it going up? Is it going down? Or is it going sideways? And what's going to be my risk tolerance, my risk level? Okay, so we're good for a rally there, right? We saw that kind of stuff. There is some, you could have, these are daily, you could have a swing higher. That would help situation. The NASDAQ should have been a little bit better on the close this week. You ended up with the Dow and the Russell, okay? The Dow is already a cheesy index to go with, just due to the fact of I'm still having difficulty with why Nike's in there. And then it's price weighted instead of market. Okay, so I like the market, the total amount, not just the coating on the car, the paint job, what's underneath. Okay, I guess we're segueing into cars now. All right, so we have the dots. So one, I have to be aware of the susceptibility of a short covering rally here, and at what time of the year it is, okay? With these little stocks, you saw it in the Russell. The Russell went from, let's just punch it up. Well, let's take a quick look down here at the NASDAQ here. All right, so we understand that with the New York Stock Exchange, that we're down below the zero line, which in theory you still want to have a defensive posture on this, okay? But because of the time of the year, November and the holiday season, it'll make or break, as they say. All right, the dots, they're not an extreme previously in the past, but with what happened off exchange time, with the Patsy plunge and the overnight swoon and futures and came back, it's not on here. So I'm sure the dots would have washed out down here too. Okay, so short term, on the same wavelength as the Russell, that's probably where the party's going to be at compared to the larger stocks. I mean, was Apple up or down on Friday? Was Facebook up or down on Friday? Was Amazon up or down on Friday? That kind of thing. You might have the right index or the right idea, the right bias, but not the right index. So I'm leaning short term that underneath, okay, for you guys to process. Me, I'll just stick with, I personally trade the foreign exchange and then watch the futures. But when you start getting down to individual stocks, like I said, a stock that has gone from 240 to $2, do you buy it? Well, we're down to the slot machine thing again. But buy 100 shares, $200, stick it in the corner and see what happens. That's how I'd have to play it. What is my risk? The $200. I can break it down with dimes, right? But I'm sure you've paid $20 for a meal you don't remember. If it was 2 tacos, well, you probably remember $20 for 2 tacos. After lobster and stuff, oh, you betcha. Okay, so zippity-doo-dah to the NASDAQ here. Back basically the same thing again, 2014 here, the pink dots. The market continued to rise, but the underlying just wasn't there. Okay, so this is China here. This is the first interest rate hike, and we made a greater low. Okay, lower low here, and prices just barely. Okay, so this was a good sign. Price was whole. People were willing to give away a lot of issues at the lowest price. Okay, so a lot of issues. What did they do? They changed hands so that we can't. So somebody has to buy on the other side, right? Market makers. That's their job. All right, so they're now in strong hands. We move. We get through all of this. Ding, 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 bells and whistles. Here's the first, where are we at here? Pointer. Okay, so the dots, we're going back. So we have basically 4 signals on the upside. So you can actually go back till December 2013. Here was when things began to drop, coincided with the move here. Same thing again. You were having your divergence, but prices continued higher. So that was what was happening here. Was there was a narrowing of the issues on the NASDAQ. Oh, look at this, 2015. I remember when Apple was at 134. Okay, but underneath it was falling apart. So you had just a handful: Apple, Facebook. Disney's not in there, but the few of the top collar ones that 2015 that was basically it. Looking for shorts. Okay, that was it, and then it fell back on itself because there wasn't enough. There was some buying coming in here with the little dots. Same thing again. They bought a lot more down here and they moved it. And that was the inventory they took on. All right, so you got up here, which previously in the past. When it went through it, it was a high. So you got your high. It came back through. Same thing. Now here, okay, you get all the issues. All right. So go and look at your July statement for everything that you bought in July. Okay, and see, or if you did back then have something in July, whatever, and see where it's at now, kind of thing. If you like the company, a lot of us rotate through things, whatever the du jour is. I don't chase. I anticipate what I think is gonna happen tomorrow. There's a few of you out there I worry about because think of it this way. All right. Are you happy with a video in the morning? Do you want to get 10 emails a day? We'll say 1 an hour. Or do you want to get boom, boom, it's like everybody else's plan. I throw all kinds of stuff out there to see if, I throw out hogs and cattle and corn and soybeans because America's 3% agrarian. So a few of you who are reading this are like, yeah, I have a hobby farm. $6 beans. I'm going to lose my farm. But all right. So in August, you had everybody, and what they're going to be probably buying was what they could afford. They couldn't afford 100 shares they went after the options. Oh, they definitely played the options. All right, so now we have the pullback in the NASDAQ again. So let's just kind of draw a line. All right, so what do we have here? Okay, this was actually a retest. I have to go back. That'd be interesting to see. That's for Kevin. All right, so dots came down here. Basically, again, blasted through it, fell through, U-turned, reversed. There we go. Came back through, blah, blah, blah. And here we are again, kind of a pause. Because it's not on the charts here with the futures did enough volume. Contracts, plus also remember, this is why I didn't get into it. You have prices of like Apple, you have they trade overseas too, like Unilever trades here and trades in Europe, that kind of thing. but that's probably where you're going to see the huge volume swing there. Okay. We're hedge funds kind of things, right? I mean, each and every one of us is based, I mean, boom, if you want to trade the Nikkei futures and you have access to it, you can do it. You're not stuck with the currencies. Just by nature, you're going to, you know, North America, I mean, that's as close to limiting it as possible. Okay. So a lot of people, you know, may have gone walking through the FTSE and the DAX during that time period. So other people may be at different parts of the spectrum. Some may have been able to capture London, some people not, whatever, that kind of thing. So, but you have here, okay, Kev, all right, sure. Let me process that a second. Mumbo jumbo. All right, so the dots come down here. We're down to this area again. Okay, so follow me on this one. All right, the dots are all down here. So there's a lot of issues that are just been beaten up pretty hard. They're resting down here, but prices are still hanging in there. So I have two things to go on it, that this actually falls and comes down to the lows down in here, and that just fluid dynamics or whatever, this just can't hold on. The ones that would come off here would be all your high, you know, Apple's under 100, you know, Facebook is under 100, you know, Amazon's working towards, they'll have fighters going into the holiday season. No doubt about that. Amazon would be one I would watch. Things are expensive there. Okay. You know, you're talking what, 30 to 50 bucks an option, you know, but things, you know, things are liquid, you know, they move, you know, it's that kind of thing. So to each their own. But if the dots, okay, I'm leaning short term here. We'll say Monday, Tuesday, Wednesday, that'll work. We'll say, even if we get a bear flag, right, we're going to get a couple of days. Okay. More than likely, I'll do some sort of live deal on Sunday. I just think that just the volatility alone that's picked up, it can carry over. Weekends usually try to, you know, the people get all, they're not focused in front of their charts and things of that nature. And they tend to have a tendency of forgetting, like that VRX stock. You know, I'm like, it's awfully quiet in here. Did you guys forget about your rampage in the chat room the week before? And there it goes, 18 to 20 plus. All right, same thing. So will these people over the weekend forget about the volatility in their portfolio and then put on a happy face? All right, so the dots here, I'm susceptible to short covering. That this is actually my 20-minute segue to what I wanted to make a 5-minute video on. All right, so move that way. Now, if the dots pick up, that may be enough to move the NASDAQ higher. I'll where's my pointer? Vis-a-vis like the Russell, right? Came screaming back. And where's my eraser? There we go. Okay. So Kevin, you know, now that you've, you know, through this, what are you trying to say? Okay. What I'm trying to say is all this new stuff. Okay. So here I have this stock. This is the first one that popped up. Okay. You look at it and you're like, oh, 28 bucks. It's at a $2 one. Not a problem. Okay. What is it telling me? Okay. First things first, we're just going to run through it. This is a, where are we at? This is a weekly chart, right? 2 years. Yeah. So this is a weekly chart. And doodle whacker, weekly chart. Okay. So this is a weekly chart. The moving average thing, that's the first, this is just an eyeball, and that moving average is 34. So it's a 34-week moving average. Hey, just a Fibonacci number. Just threw that out there. No here or there or anywhere. Okay. All right. And then Bollinger Bands. So what did we have? We have a longer coiling market. Okay. In commodities, this is what I want to see. My oops-a-daisy, since talking about bullion markets, would be copper, because copper traded sideways for a while. Okay, uh, it didn't pick up steam until later in the year. Okay, for the commodity turn, that was our lagger. And since I don't do much in copper, it didn't affect me. But as you guys continue to go on here, you will find if we both arrive at the same thing, but we're on different sides, you're definitely going to remember that because you get an opportunity, you know. Looking back on it, of course, it's straight up. That was my bully. I was looking for it in gold and silver, and hey, it was in copper. What do you know? Will you remember? Oh, yeah. Now, and here's the other one. Kevin, prior to copper's explosion, you didn't like the metals. So now we have gold and silver coming down. So would copper come down? If I find some time after London today, I will go zippity-doo-dah back to the 80s and 90s on copper and just take a look. Somebody got caught in copper. It was very painful. It's was it $25 grand a buck, you know, and it's with real money. And how quickly can they turn the on switch on with copper miners? You know, this isn't like oil. You know, the big trucks have been moved somewhere else, right? Are you going to invest on rail cars to move all the dump trucks back the other way? No. So I don't want to overthink it, but getting to this stock, okay, so you have a large sideways pattern. When you have a large sideways pattern like this, it's usually an accumulation pattern. This is why like I said, I have a disdain for stocks or whatever. So this pattern, I immediately said, well, I wouldn't mind buying this. It's holding above the 50% here. This on a weekly of the RSI, whatever on the MACD, unbalanced volume is picking up a little bit. And now money flow was the only downside on this. So I have two ways of looking at this. If I move it back out, one more time, Kev. Okay, I move it back out from a weekly. So I dropped this back. Bollinger Bands narrowed and everything that took off at ran. Well, here we are. Okay, so here we are at $1.83 or whatever. Here's a Fibonacci deal, okay, but we've already had an explosive move. Price has memory, right? Yes, price has memory. Okay, so 340, all right. How about this? Natural gas got to 340. This came running all the way back. We'll use natural gas. I kind of like charts if they don't have the name. Or I'm just looking at it mechanically. Now, this is the part that I hate on equities, okay? The unbalanced volume, all right, is still hanging in there. So what that tells me mentally is that the pain is to the downside in the stock. What I failed to point out ahead of time, as it's stock, well, I think I can go back higher, right? Oh, this is this one, okay. You have a $75 stock. That's now at $2. All right. So what do you do? Here's our slot machine money. The other one is that the unbalanced volume is still hanging in there, which leads me to believe that there's more to the upside. Now I'm going to watch this. Some of you are actually going to go and throw $200 at this or $2,000, or whatever. But the little dots, this would be one of those. Oh, and look, it has 4 letters, so we know where that hides. Okay. It would be susceptible to the little pink dots moving further. Okay. So here you have something that's $1.83, you know, $1.60, you know, $1.40. So you're looking at 43 cents worth of risk. We'll say 50 cents. Okay. There are people that I send stuff to that want to flip 1,000 shares for 50 cents. Okay. Of course, the same amount applies here. What do we know? It can only go to 0, right? Okay. One more time out. Okay, so here's our larger sideways pattern. If by chance, this is why I really hate stocks. If by chance it clears the previous high, okay, here's the target I kind of look at. if you buy 1,000 shares, right, and you're looking for a 50-cent flip, well, these are the targets that you're shooting for. Okay, you're shooting for the upper end, but can this go to $6? We also have the timing this year of biotechs and stuff in the spring, right? So this will be one that you just kind of watch this spring or whatever. My targets, if you go in and buy, if you buy today, whatever, or the moving average here, the next Fibonacci, whatever. I'm not a, do I think this thing's going to zero? Well, if it goes from here to here, I have to assume that they're going to run out of money or whatever. That's for you guys out there that EBITDA and PE and everything. I do not. So here you have the little, like I said, the little pink dots. And it basically says there are a lot of little issues like this that could run higher to substantially higher. And of course, after my little copper thing, running to $6, well, at what point? Scanning for short interest. How much is the short interest in this? I haven't looked at this yet, but basically this is as far as I've gotten today. Actually, I've spent more time talking about it than looking at it. I looked at the charts and I go off the gut instinct. There's your mind and your body, two separate things. Your body's controlling your mind. Won't go into that. Most people are chickens. Wake up in the morning and peck, 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 peck. All right. So you have a larger sideways pattern. You have the money flow people haven't puked it up yet. So they were able to hold it, look at it in dollars and cents kind of thing and not as much as percentage. If you buy you can kind of look at it as price as an open-ended option. But if we do get some sort of massive short covering rally, right? I'm not saying it could go to $6, but this is one of those things that just takes off. We saw gold go from $1,900 down to $1,000. It was cut in half. And then in the beginning of the year, I thought 1,400. We got close a couple of times. And now under 1,250, it's on its way to 681. So the same thing here. What about these biotechs like what did I send out a couple weeks ago? LABU. Okay, I think it was at $30 or something. 26 it was, I think. LABU. Boom. Okay. Oh, that's where that term comes from. All right. Same thing here. AEGR. All of a sudden, with what showed up in, say, copper, or what we saw in the rallies and the metals, the same thing with these itty bitty biotechs. You have seasonally, they go strolling on in to. There's a meeting or something in San Francisco. It used to be held over Macworld. I'm at Macworld, but I'd hang out with the drunken 20-year-olds in suits. And just pick up their clip. Oh, you can't tie your shoes and you're telling me about what? Let me take a look. I'm sitting in the corner of this one place having a Guinness, turning on Bloomberg. Just, they're oblivious. They're up past their bedtime at this convention. I'm at Macworld. I mean, it's 5 o'clock. Okay. Go find a corner to sit into until they let you in at 10 o'clock the next day or whatever time it was. I miss Macworld. Okay. So I'm just throwing that out there overall for the stock. I'm going to watch it and whatever, but this is how I operate. The market is susceptible to short cover and rally of stuff we've never heard of, stuff that's fallen 97% the last hurrah kind of deal. Before bankruptcy, whatever. I don't know. That's why I hate stocks. Commodities. I like that commodity won't go to zero. It's at a 30-year low. Ooh, ding, ding, ding. Liquid. At what point do you, it opened at the high here. How do you will to time it? That kind of thing. And let me move down quicker here so we look at this. So that's basically it. What's that moving average? So 240. Okay, take a look at the lines here. All these are little different strategies. You have your moving average, you kind of hang into it and see where did it cross. $1.60 and it crossed back through at 240. I need to add another one here. That's too much. 34 at indicator. Weighted moving average is a little more sensitive to the end. Actually, what I want to do is add a stop and reverse. What do they call it on here? How come I don't have it on here? What do we have on here? Wow, we have a lot of stuff on here. Kevin, you're the navigator. Stop touching the buttons. Woo, what's this one? What's a mass index? No. It's. I started with an RSI. It was very simple, right? If it's going up, the RSI is going up. I mean, then you're basically looking for a divergence. Triple moving average. Do I not see it on here? I don't see it on here. Maybe that's why I don't have it. And then those are the button all the way down to the end. Come on, Kev. You can do it. There you go. Push the button. Fat fingers. A hoof. Okay. Oh, you sons of monkeys. There we go. Come on. Get. All right. 20 is a little, okay. 21. Oh, that's right. Got to turn it this way. Downside of the software. What's another one? Hey, I want to try 9. What's it look like? 9 is a little tight. 13 will do the trick thing. What 14? That'll work. Okay, look at that. What did I find here? I found, okay. All right, of course, perfect color, right? It blends right in. There's a 14-period weighted moving average. Okay, so what do we have here? Here's, all right. Some of you may do something like, you know, depending upon your commissions, whatever. It says $1.75. That's round number, so I'd do like 177 or whatever. Look at it this way, guys. When I got into the business working at EF Hutton, we were charging $150 a side for one futures contract. That's $300. Okay, so when, you know, different ideas. If you're stuck paying a minimum of $10 every time you get in and out, it kind of defeats the purpose here of scaling down penny by penny by penny by penny kind of thing. If you have a, you know, if you're paying a penny a share, you know, for $1, like an IB type thing, or, you know, some of you are stuck at $5 for 1,000 shares or $10 at 1,000 shares. Some of these strategies will be counterintuitive, whatever, to what's going on. What I do, okay, since the unbalanced volume, they wouldn't give it up. Okay, or the money flow, I think it was. Either or, both of them. All right. I guess it's more unbalanced volume. Okay, they won't give it up means they're hanging on to it. Okay, there wasn't much new money that wanted to come in on here. Okay, so there was very little buying, which actually means in theory, if you come down, there'll be very little selling, except for all the people that got in up on here. These are days, right? Yeah, these are days. So at the end of the move, it was the last 5 days, and that was the end of it, right here. The money flow came in on the 23rd or something. Unbalanced volume. Unbalanced volume actually peaked at the high. How come this doesn't fit my screen? Oh, that's all interesting. Does this get smaller? No. Grr. All right. And then the MACD finally crossed down here. So we're just gonna go off the moving averages right here. Okay. You'd want to support this because you're looking at pennies here. Okay. To me, it would make, you know. Okay, what do we got? $1,800. 100 shares, $200, $600, $1,000. Okay, different ways of looking at this. Okay, you know, you buying at whatever market is on Monday. Hopefully, it'll come back. You buy in 100 shares or whatever, and you just cross your fingers. The other one too is that you find something underneath. You have one, let's say another 100 shares underneath. Let's say 155. Okay, so you're down $30, $33 on this. Whatever, 55, and then down to 155 area, which is the lowest part of this area. So you've committed less than $400 or whatever, but you're expecting it to go to zero. That's, you know, it's a $75 stock that's at $2. Hey, it's party's over with, kind of. That's how I have to look at it. Equities, they all seem to go, everything goes to zero pretty much, right? Corporation can live on forever. General Motors. All right. Okay. So, and these lines here, Fibonacci lines of the high and the low down back a little further here, right? Yeah, down here. Okay, so this is going back to June. Okay, so this is over the summer. It just, all it basically did is it just marked time. It just crossed over the moving averages. It had a run up and it's come back down. Now, the deal is that do we get one more just jam and swing out of this thing? So if by chance some of you buy 1,000 shares and you only have to only cost you a penny, you know, say that this is, you know, 217 on here in this Fibonacci, make it 218 or 219 and sell 100. Up here, you know, this is safe around 40, sell another, you know, 39, you know, make 41, sell 100, sell 100, sell 100. You can go that way too. So you have a $2 stock that's now a $3, that's 50%. Or like I said, it's a slot machine. You put in your $200, your $400, and you pull the handle. And that, the deal though is to hold on to it, like with the moving averages. Once it flopped over the top, it had a small bounce, and then it stuck around on it, and then it exploded. Okay. September. All right. Does it have a repeat? Well, it found mine, but that was just because it crossed over the weekly charts. Okay, so it took all this effort just to get my attention, and it's come all the way. Maybe that was the end of it. Game over. You know, this is going to be it, the high for the rest of its lifetime. I don't know. But the deal is that's how this kind of thing plays out. Like I said, I'm just going to watch it. Okay. And if it does go up, like I said, you know, we'll look at it this way. You're either going to get 240. Well, even if you go back half back, you're either going to get 240. So you're going to make a third, right? I think that's a third. Third, you know, make a third there. Come back in probably between this area. They're going to have targets up here, but most of this is just selling. So some people are that got stuck in here, that may be selling. You may have sellers. You know, we'll watch the money flow on the way up. But the sellers may come in around 3 and change. And then you have other people that'll start talking about it going to, like me, 550, 6, you know, that kind of thing up in this area. You know, I occasionally, what I do then is if I was looking to short this thing at 75 or whatever, and it's at $2, okay, after it gets up to the 6 area, I'd start throwing out some numbers. You know, I'll just make Captain Obvious. Well, obviously, the monthly R2 is at $34. I mean, just some far way out of the money just to see how many bears are left. Okay, there are professional people out there that short these things. You know, it's a fluid two-way street out there, and it's not even a street sometimes. It's off the books, you know. So, but we won't go into that. This looks much longer than I wanted to. But I just wanted to point out once again with the, you know, the little pink dots here, you know, and then all of a sudden, come on, you little bugger. Did it freeze up on me? Man. All right. I'll let you guys go and I'll work on the next video. Everyone have yourself a wonderful afternoon. Toodles.